Good afternoon, gentlemen. My name is Zeke Turner, and currently finishing up my senior year at Taylor University in Indiana. So 4 more weeks, and I'm out of there. As someone studying finance, I do appreciate your comments as to the teaching of investment in academia. Certainly has some development that can make there. I do say that with hope that very few grad school admissions officers are listening right now. But I do want to say a special thank you, quickly if I could, to all those professors who do have the intelligence and the guts to actually teach value investing on that level and go away from efficient market theories. I do kind of wish Benjamin Graham were still teaching. Many questions have been asked as far as technology and its development into the business model. I think the greatest effect of this will probably be in the globalization of the economy. This has had and will continue to have a significant impact on the business model as we know it today. Now, except for certain growth opportunities, they may have a smaller effect on companies such as See's Candy or Nebraska Furniture Mart, but has had and will continue to have a dramatic effect on companies like Gillette, Coke, who have significant international presence. My question is, how does your approach change, if at all, in light of the international expansion? I'm particularly interested in the introduction of greater difficulty in understanding the business models, in the understanding of the economic future, and the economic risk associated with the international scene. In addition, do you actively search for a global scene for investment opportunities?
Yeah, the answer is that we obviously like businesses that are good businesses at present volume and that have the chances to expand significantly with similar economics. And with any business that's been around the United States a long time, there's probably more opportunity, potentially anyway, around the rest of the world than here. And Coke is growing faster, although it's grown well here, but it's grown faster around the world than here, and that's been true at Gillette also, just because we were a more mature market. So we love the idea of products that will travel. Some travel well, some don't. I mean, it's an incredible world that way. Candy bars don't seem to travel so well. Soft drinks travel terrifically, and razor blades travel terrifically. But the Cadbury bars sell in England, and and the Hershey bars sell here. And it's very hard with some items to travel. In fact, within this country, it's amazing to me. We talk about having a mobile society, and people are moving all the time, and we're all watching the same television, everything else. And the supermarket share of Dr. Pepper in Dallas is 18 and a fraction percent, and in Boston it's 0.6%. I mean, 18 to 0.6, 30 times the market share. Dr. Pepper's been around forever. People move back and forth and everything, and how can you have that sort of a differential in this country? Royal Crown Cola, 3% in Chicago, 0.1%, maybe in Detroit, a couple of 100 miles away, same kind of people, all of that sort of thing. And Royal Crown's been around for 75 years or whatever it may be, 50 years at least. And you get these incredible differences in what people do, even within this country. So it's not easy to predict how, if you can't predict how Dr. Pepper, or you can't figure out how to make if I were to own Dr. Pepper and was selling 18% of the market in the supermarkets of Dallas, it would drive me crazy. I was getting 0.6% in Boston, or I think it's 0.5 maybe in Detroit. That would drive me crazy. Although maybe I should just be grateful that I've got 18% in Dallas. It's very hard to predict how products will travel. With See's Candy, we have this incredible penetration in the West and particularly in California. We know it's the best candy. Now, boxed chocolates just do not sell big in this country. The annual consumption is low, but it still seems that if we can make a lot of money in California, we ought to be able to make some money in New York or Pennsylvania, but we haven't figured out how to do it. We've tried a lot of things. So the answer is we're always interested in geographical expansion, whether it's even in the United States or going beyond that into other countries. It's not as easy as it looks. But when the chance to do it comes, then you ought to just pound and pound and pound. And we occasionally have bought stocks in other countries. I wrote a fellow the other day that I read about in Germany about his business. I've never met him or anything else, but it sounded like he had a pretty good business and it sounded like he might be my type of guy. So I just wrote him a letter. Haven't heard back either. But I may. The odds are against it. But I would it sounded to me like I'd buy his business if he chose to write back and wanted to do something. And we're very willing to do business, in any country in the world where we think we understand the nuances of the corporate governance system and taxation and that sort of thing. I mean, we don't understand all 200 countries by a long shot, but there's plenty we'd love to be in business in. We looked at a very significant company in Japan a couple of years ago, and some other fellow I know bought it and has done very well. It would have made sense for us, and we missed it. We will continue to look at things internationally. It makes a lot of sense, and we got a lot of capital to employ. We're more likely by some margin to find things here, but we may find a big one outside of this country. Charlie?
Nothing to add.
Okay, number one.